The Atradius Risk Map offers an overview of the risk level associated with countries across the globe based on a variety of data sources. Global inflation is expected to rise in 2022. While the Russian and Ukrainian economies are relatively small, they impact other global economies due to their exports, such as oil and gas, wheat, fertilizers, nickel, and platinum. While global growth will slow, the impact will be higher for Eastern Europe. Atradius economists still believe the current bout of inflation is temporary, and we expect supply chain issues to ease. However, if the Russian-Ukraine conflict persists into 2023, Eurozone GDP will be further impacted. While other countries may avoid a recession, the Russian economy will experience a deep recession in 2022 due to sanctions imposed following the Ukraine invasion. Russian suppliers that provide palladium and nickel will be impacted, also affecting the automobile and semiconductor industries. The ruble weakened substantially in the early stages of the conflict, but has recovered back to pre-war levels. However, the recovery is somewhat artificial, as it is driven by capital controls of the Russian central bank. A sovereign default, where Russia does not pay back its debt, cannot be ruled out. Belarus is also facing harsh economic sanctions, similar to Russia, for its involvement in the conflict with Ukraine. The Belarusian ruble weakened after the conflict and remains low, putting the country in an even more vulnerable foreign debt position. Belarus's banking sector is also exposed to ruble volatility, as a high percentage of loans and deposits are dollarized. The Ukraine is tremendously affected both in human suffering and economically by the war with Russia. Many people have fled the country, and much physical damage has been done to the buildings and infrastructure throughout Ukraine. The war will lead to a large increase in external debt and a sharp worsening of the fiscal deficit. In addition, the automotive industry will be affected due to Ukrainian supply chain issues. However, strong support from financial institutions should help support the country's ability to pay its debts, lessening the risk of default. For a more detailed risk assessment on countries around the world and for more information on how trade credit insurance can help offset risk, visit atradius.us/riskmap.